In January 2026, U.S. federal prosecutors opened a criminal investigation into Federal Reserve Chair Jerome Powell. The inquiry focuses on whether Powell's testimony to Congress about a costly renovation of the Federal Reserve's headquarters was misleading, and it involves grand jury subpoenas and the threat of indictment. Powell and others say this is highly unusual, possibly unprecedented for a sitting Fed chair. Powell argues the investigation is not really about the building project. Instead, he says it's part of ongoing political pressure from the White House over interest rate policy because he resisted demands from President Trump to cut rates more aggressively. Former Fed chairs and many economists see this as an attack on the Federal Reserve's independence, which is considered essential to credible monetary policy. Immediate market effects. The news of the investigation triggered volatility in financial markets, especially asset classes that are sensitive to uncertainty and policy risk. Stock. Market stock futures fell sharply when the investigation broke as traders priced in risk and uncertainty. Major equity indexes saw downward pressure before recovering somewhat in regular trading. Financial stocks in particular were weak because political conflict around the Fed raises questions about future policy direction. US dollar. The US dollar weakened because confidence in the Fed's independent decision-making is a key driver of dollar strength globally. Safe haven assets. Gold and other safe haven assets surged, with gold reaching record highs, as investors seek protection against market and policy uncertainty. Interest rates, Treasury yields rose, reflecting nervousness about future economic and policy stability. Why this matters for the market. 1. Fed independence is a market. Pillar markets generally trust that the Fed will set interest rates based on economic data, not politics. A criminal probe tied to presidential pressure shakes that trust, which can increase risk premiums and market volatility. Policy uncertainty equals higher risk. If markets think the Fed is politically influenced, investors demand higher returns for riskier investments, pushing equity valuations lower and bond yields higher. Shifts in capital flows. Weakness in U.S. institutions can weaken the dollar and shift capital toward other countries, commodities, or alternative stores of value, e.g. gold, Bitcoin. In simple terms, the investigation isn't just legal news, it's market news because it creates uncertainty about how monetary policy will be made going forward. When investors worry that a central bank's decisions could be influenced by politics, rather than economics, it increases risk, spooks markets, and shifts sentiment towards safer assets.